Hello, everyone, and welcome to another edition of the Technical Market Update. I firstly must apologize for not having a update yesterday, but we had some technical difficulties. The video was recorded and everything, but it got corrupted as our systems here crashed essentially. And I have backup charting software and backup charting that I use, but we don't have things to back up and capture these screen recordings. So long and short of it, I must apologize. I received a number of emails from folks wanting the update because yesterday was a pretty eventful day in the market. But let's review what happened. Over the last couple of weeks, we have been speaking about the fact that the market is in or was in a triangular consolidation. And I indicated that once the consolidation is over, we will have a better understanding where the markets are heading, and we could get a pretty strong break. Now the market closed above, as you can see, this is the Euro USD daily chart. Market's in a triangle. Nothing much was happening, but I was saying wait for the break. Okay, so the market closed above the downtrend line, and then we had some follow through, and the market rallied about 300 pips over 400 pips. Where currently, this is today's date on Thursday here. So the market rallied over 400 pips, and this market broke to the upside and not the downside. Okay, so what has happened? The market, which was very important, took out resistance right here. These previous highs were taken out, but is this a reversal? For this to be a reversal and for it to gain momentum, we'll want to see the market take out these swing highs up in the 114 level. But what's happening now is that the market is up against the monthly pivot point numbers. Let me just go down to the 4-hour chart. And although it's the last day of the month, today is the 30th of April, we see that the market is just around the monthly R1, which is 111.67. Market is at 111.67. It's just flirting with that area. The high was at 112.50. But 111.67, this region, there is a confluence of indicators here. We have our monthly R1, we have our weekly R3 pivot point resistance. We also have we're also near the 618 retracement level, which is at 111.27. So we're hovering near there also. So for the market, for the bulls at least, we want to see the market continue to rally and overcome these areas of resistance. Now tomorrow the new monthly numbers come out, so we can look at the new monthly resistance levels, monthly R1, the monthly R2 tomorrow. But we have to overcome this level for the market to continue rallying. Now, because the euro was up so much, we had a short squeeze amongst most European pairs. This is the euro versus the Canadian dollar rallying. Euro versus the British pound is rallying. Let me look at the euro versus Australian dollar is also rallying. Let me look for Australian dollar. Euro here. Euro Australian dollar. Pretty strong rally. So we're seeing a short squeeze amongst the European pairs currently. But as I said, we are in this area of resistance right here. We're in this area of resistance, and if we do get a sell signal near this, that could be a possible sell for the market to continue lower. And for the market to continue higher, you want to see this 112, 114 area take note, and then you want to see the market close above this pivotal resistance area. Okay. Okay, moving on to the British pound. We see that the market rallied above its monthly pivot number, but it's coming back down to it at 152.99. And remember, these pivot numbers are not exact. It's not exact turning points. What you may find is a box or an area of resistance that the market stays in. So, for example, this pivot number was 152.99. The weekly R2 was 154.09, and the weekly R3 was 155.20. What I sometimes do is just average those three numbers to get an approximate area of resistance, which was around 154.09 or so, and the market is backing off from that level. It's also close to the 786 retracement level from this high here down here to the 146 swing low. Let me redraw that. Okay, so that this area of resistance we need to look out for. And remember, when trading the pound tends to be a bit more volatile, so it tends to go further above and below the pivot point numbers. Okay, so we are seeing sellers come into this market, and for the bulls to continue to regain momentum, we want to see a close above this swing high of 155.49. If the market remains below that level, we're in danger of this rally collapsing and the markets sell off. Okay, looking at another triangle consolidation, we have the Australian dollar, British pound. And we've been speaking about this triangle for a number of weeks or days, similar to the euro. But we see that the market is still in this triangular consolidation pattern. And I suspect the breakout of this consolidation could be pretty strong. So we will keep an eye out on that. The majority of the time, the market will break out to the upside. But as we saw with the euro, just because the market is trending, the market can break counter trend also. So that's something you need to keep an eye out on. Okay, another market I want to highlight is gold. And gold has been up and down, but it essentially has been in a channel consolidation. Let me draw the channel here. So it's swinging between 1,220 and roughly 111.79 or so. That's what's happening in gold. So as further clues as to which direction this will go, we want to see a close below the channel here. So a close below this channel would be pretty bearish for gold, and above this channel, 1220 resistance could give the bulls some momentum with gold. Okay, so and briefly I want to speak about traders having success in the markets. Now, I find that when I speak with traders and investors, folks come under two categories. There are the folks who are not really that passionate about learning how to trade, or don't have the time to learn to trade. They just want to follow a profitable system, which is fine. But I'm speaking about the folks who actually want to learn how to trade themselves. And there are a lot of stories that I hear of folks not having success in the markets. And one of the reasons is that your success may not be in another trading course per se. Now, a traditional trading course gives information about how to trade, etc. So if you're at that point, that's fine. It's always good to look at courses and also good to take courses. In my trading career, I have bought over 10, 15 courses on trading. But one of the reasons that, or one of the tools that you can use to become more successful is what I call the professional route. And an analogy that I like to speak about is basketball. Let's say the Chicago Bulls, a great team in the 90s, weren't doing that well. Would they take another course on how to play basketball? Well, definitely not. The thing is, most of them know how to play basketball already. It's just that expert, that person, that mentor, that coach that will then guide them to say, okay, you are doing this wrong, you are doing that wrong, and work with the team as a team and work with individuals to improve their performance. And I find that looking at the difference between retail traders and professional traders, hedge fund traders, the professionals have that guidance. They trade along with someone who is an expert trader and able to guide them on what to do and what not to do. And retail traders just don't have that guidance and that level of expertise working with them one on one to become successful. And that's why I believe that courses are fine and courses are a good starting point. But if you really want to become successful in the market, it is good to get one on one attention and not just some videos or some courses. As I said, there's nothing wrong with courses, but to get to that next level, to get to that level of an expert trader, that one-on-one coaching is actually good, and it's something that you should look into. Okay, so we have some interesting markets, and I'll have a further update tomorrow. If you would like the trading signals, let's say you just want to have signals sent to your account, you can click on the link below. And if you are interested in that one-on-one coaching, that one-on-one mentoring, there are some emails going around that you can just search your email for Aces Trading, and you'll see some emails going around stating that if you want to join that. Now, the one-on-one coaching is done by me personally, and I cannot accept everyone. I don't have other folks training you. I will take you through the steps on how to become successful, and the success rate is very high because it's essentially a life-changing program. But I can't do everyone. So search our email and submit an application, and then we will take it from there. Thank you very much for listening, and I will see you again tomorrow.